In this video today guys, I'm gonna give you one of the simplest ICT trading strategy that you will ever learn. This is one of my favorite ICT trading strategy and I am going to break down the step-by-step guide so you can learn everything to use this strategy to find the perfect opportunities in the market. Let's deep dive into today's video. So for this strategy, I recommend that you either stick to 4-hour time frame or you stick to daily time frame. Now we will have a look at both of the time frame examples so you can see how this strategy works when you choose 4-hour as your main trading time frame or when you choose daily as your trading time frame. Now how it's gonna work is that we're only gonna be looking at 2 candles every single time. If you decide to start your analysis on the 4-hour time frame, then you just need these type of 2 candles on the 4-hour time frame, or if you decide to do that on daily time frame, it's up to you. Let's just say this is a 4-hour time frame. Now we need 2 candles and the second candle, it should be inside the body of the first candle. You can definitely see that the second candle right here, it is inside the first candle body. The high of the second candle should be lower than the high of first candle, and similarly the low of second candle should be inside, or let's just say should be higher than the low of first candle. I made these 2 candles to give you an idea that how candles are going to look like. They can be different, but just to explain to you that the high is this, it's lower than the high of first candle, and the low of second candle is right there, which is lower than the low of first candle. So if we are doing this analysis on the 4-hour time frame, then what we're going to do right after the second candle, if it's inside the body of first candle, we will go down to 5-minute time frame. But if you are doing the analysis on the daily time frame, then right after the second candle appears and it's inside the body of the first candle, then you have to go down to 1-hour time frame. So 5-minute is going to be your trading time frame where you're going to execute the trade in case of 4-hour, and 1 hour is going to be your execution time frame if you decide to go with the daily time frame. And I'm going to give you 2 examples for each time frame. 2 examples for 4-hour and 2 examples for daily, so you can understand that how simplest this trading strategy is, and you will also see the winning ratio of this strategy, that it works more than 90% of the time, guaranteed. So let's have a look at a couple of examples. So right now we are on the 4-hour chart on USD Japanese yen, and that's the second candle right here, and we have our first candle. We can definitely see that the second candle is inside the body of first candle, and not only that, high of second candle is lower than the high of first candle, and low of second candle is definitely higher than the low of first candle. So what we're going to do, we are simply just going to mark the high of second candle and we're going to mark the low of second candle. And when we will mark the high and low of second candle, we will go down to 5-minute time frame. And on the 5-minute time frame, we need one structure which I'm going to show you first. Then we will have a look at the example. So let's just say that this is the high of the second candle and this is the low of the second candle. Now on this, when you will go to 5-minute time frame, market may look like this, that there was a buyer's movement, then sellers come down, then there is a buyer's movement. Now when there is this type of a movement, what we need market to go either lower than the low of second candle, takes out the liquidity, comes back in, and then we will be taking the trade from this price, which is the low of second candle. Or the other scenario can be market to come higher than the high of second candle, takes out the liquidity, comes back in, and then we will be taking the trade from the high of second candle and we will be targeting the low. Now in either scenario, what kind of a market structure we need is that when market will do the liquidity sweep, it should not be just a simple wick. When candle will close, there needs to be a proper candle below the low of second candle, or there needs to be a proper candle above the high of second candle. There should not be just a simple wick or tail when market is gonna sweep out the liquidity. Now I'm gonna show you how it's gonna look like. So that's the high and low of the 4-hour candle on the 4-hour chart. And this is the second candle. So we're gonna go down to 5-minute time frame, and on the 5-minute time frame, the structure looks like this. We have this high right here and we have this low right here. What we discussed that if market is gonna come it should come, takes out the liquidity, then comes back in, then we will be taking the sell from the high and we will be targeting the low of the second candle. So let's see how market is gonna come. So as you can definitely see, market, it is trying to go higher than the high of the second candle. However, it hasn't really went yet. Now this candle closed and it left a wick on it. We discussed that we will not be interested when market will leave a wick. We need a proper candle to go higher than the high of second 4-hour candle, close that candle, then sellers to come down. Just like that, the way the candle appeared, it went up just like this. That's the market structure we want. Now what we need sellers to come down, which will be the liquidity sweep hunt. If the sellers will come down, we will be taking the sell from this level. Now we need sellers to come lower, the way they just came lower. So what we're gonna do, we're gonna simply place our trade right here, put our stops higher than the liquidity sweep that just happened, and our target is going to be the low of second candle. Make sure to give some space to trade, to breathe in case market will try to go back up again to take out another liquidity to do the stop loss hunt. Make sure that you give it some space so there is a less chance of you getting stopped out. So let's see how this trade is gonna perform. Now this trade just got executed right exactly at the level from where we wanted to take it. And the reason why I said make sure to leave some room for your trade to breathe, because this candle which came, it came little higher than the liquidity sweep that happened, and right after that sellers, they came down. And look how beautifully sellers are going down. And they just hit the take profit, and by using the simple concepts of ICT, you just made more than 5.95 rewards from one single trade. Now that's just one example. I'm gonna give you 3 more examples, so that way your concepts, they will become much better. You will have an in-depth understanding of how this simple ICT trading strategy works. Now we are on the Euro US dollar 4-hour time frame chart, and on the 4-hour time frame we have this candle which is inside the body of the previous candle. So the high of second candle is lower than the high of first candle, and the low of second candle is definitely higher than the low of first candle. So what we're going to do, we're going to mark the high and low of the second candle, and right after we mark it, we will go down to 5-minute time frame because we are doing the analysis on the 4-hour time frame. So this is how the market structure looks on the 5-minute time frame. Now we're gonna wait until market either makes a liquidity sweep hunt on the buy side or on the sell side. We will wait until there is a proper liquidity sweep, then we will be looking to take the trade. So let's see how market is gonna come. As we can definitely see, sellers, they came down aggressively. They went lower than the low of second 4-hour candle, and right after that there was a big buyer's candle which came right back in. So what we're gonna do, we're gonna simply place our trade exactly at the low of 4-hour candle, and we're gonna place our stops lower than the liquidity sweep. We are gonna make sure to give it some space, so that way, in case if there is another movement to the down, we won't get stopped out. And our target is going to be at the high of the 4-hour candle. Now this trade, it does not have a higher risk to reward ratio, but our goal is to find the perfect trade opportunities with the higher chances of trade going in our favor. So let's see that how this trade is going to perform. Trade just got executed and buyers, they have started to go up. The reason why I said make sure to give it enough space for the stop loss, look at the last movement that happened from the sellers. It would have taken out our stop loss, but because we were smart enough to give it a little bit of room, that's why we are still in the trade. It just hit our take profit. Yes, this did take a while to reach our take profit, but it does not mean that you close your trade. Once you enter into the position, your stop loss is in place and your target is in place, make sure to let the trade run by itself. Do not just close the trade whenever you will feel like, oh, market isn't going anywhere, it hasn't hit take profit, it hasn't hit stop loss, so I'm just going to close the trade. Never do that. Make sure to always wait until trade plays out. This trade took a lot of time to play out, but it did play out. Now these were the 2 examples when you were finding the candles on 4-hour time frame. You are going to 5-minute time frame to take the trade. What if you want to stick to only daily time frame? Then you have to go down to 1 hour time frame, and I'm going to give you a couple of examples for the daily time frame as well. So the first daily example is going to be on British pound US dollar daily time frame. We have this beautiful bullish candle, and right after that there is a bearish candle which is inside the body of the first candle. So we're going to simply mark the high and mark the low of that second candle, and we will go down to 1 hour time frame to check whether there is going to be any trade opportunity or not. So on the 1 hour time frame, this is how the market structure looks. That's the high of daily second candle, and that's the low of the second daily candle. Now we're gonna wait to see in which direction it's gonna do the liquidity hunt. Sellers, they definitely came lower than the low of second daily time frame candle. We're gonna wait to see whether buyers will come up again. That will be our liquidity hunt. Then we will be looking to take the trade from the low of second candle, and we are going to target the high of second candle. Buyers, they have definitely came inside, so we're going to simply just place the trade right here. We will place our stop loss, and we're going to give it a little bit of room to make sure it does not get stopped out, and our target is going to be right there, which is the high of second candle, and it's going to be like 2 risk to reward ratio trade. So let's see whether it's going to be executed, and if it will be executed, whether it will go in our favor or not. It just got executed, and buyers, they have started to go up, and they just hit our take profit. It's easy. Again, you just need to make sure that you are following every single step that I'm showing you, and you are waiting for the right execution time. You are just placing the limits, you're placing the right targets, you're placing your stop losses at the right place, and that's it. Trades are gonna perform by themselves. Now let's have a look at one more example, so that way you have an idea how daily time frame works. Now this time we are on the daily time frame on GBP JPY pair, pound Japanese yen, and the second candle right here, it's the bearish candle, and the first candle is also the bearish candle, but this second bearish candle is definitely inside the body of the first candle, and that's the high of the second candle. I have already marked it, and that's the low of the second candle. We are on the daily time frame, so what's the next step? Just simply go down to 1 hour time frame, and on the 1 hour time frame we are gonna wait until market makes a rejection either to the upside or to the downside. Then we will wait for the market to come back in the zone, and then we're gonna place the trade. So sellers just came down, they definitely are making a rejection on the sell side, and buyers, they also have came back in. So there was definitely a liquidity sweep there. We're gonna place our limit for the buy right here. We're gonna give a little bit of room to the trade to make sure it does not get stopped out, and our target is going to be at the high of second candle, and it's gonna be more than 5.5 risk to reward ratio trade. So let's see how this trade will play out. Trade just got executed, and buyers, they have started to go up already, and they just hit take profit very nicely. Beautiful, isn't it? I showed you 4 examples. 4 of them were very simple, with very simple rules that you are required to follow, and all 4 of them, they worked very well when I followed the rules every single time. That's the most simplest ICT trading strategy that you can ever learn. I want you to backtest this strategy on your own to find out what's the winning percentage of this strategy. And once you backtest it enough, let me know in the comment section how was the backtested data for you. And if you have got a lot of value out of this video, do not forget to leave a like and subscribe to my channel. And that's it from this video, guys. Thank you so much for watching until the end. The simplest ICT trading strategy that you will ever need. I will see you guys in the next video. Thank you for watching. Do not forget to let me know what did you learn from this video. See you in the next video. Bye for now.